And thanks for having us. So before we begin, I think it might be helpful for us to just give a little bit of context for why we're here today. So I'm here today with my colleagues, Ming, Irene, and Laura. And we have recently just graduated the Master of Financial Risk Management program, which is part of Rotman U of T. And during this program, we had a chance to participate in the 2021 PRMIA Risk Management Challenge. And for this year, the topic of the case competition was about the currency option desk scandal at NAB, National Australia Bank, in 2004, which resulted from their poor risk management. And in this case competition, our team proposed a improved risk control framework for the option trading desk, and also conducted an analysis on their earnings smoothing practice. And as a result, our team was able to win first place among 57 teams and across 9 different countries. So without further ado, I think I'll start by giving you a little bit of a background for myself, and then we'll pass it around and kind of give everyone an intro. So my name is Jason. I grew up in Hong Kong. I did my undergrad at U of T, specializing in finance and economics. And prior to my master's program, I've had some internships in private wealth and private equity. And more recently, I was at the Bank of Canada, researching the impact of low interest rates on pension asset allocations, and essentially how the low yield environment over the last 20, 30 years has affected their ability to meet long-term liabilities. And personally, I'm also very interested in the cross-section between finance and technology. And currently, I'm working at RBC as a data scientist in their capital markets technology team. And with that, I'll pass it on to Laura.
Thank you, Jason. So hi, I'm Laura. Similar to Jason, we just graduated from the MFRM program. And prior to joining the MFRM program, I have just completed my bachelor's degree from U of T as well, the management co-op program with a specialization in finance, which I think I was lucky to have co-op experiences in a couple of different areas in the industry. Prior to this competition, I was working with EY under their financial service risk management team, developing an enterprise culture and economic risk assessment methodology, which I recently joined them back to continue in the stream of operational risk and compliance. And now I'll pass it on to Irene.
I also have pretty similar academic background as Laura. I also had my undergrad with University of Toronto Scarborough with a specialization in accounting. And then I joined Master of Financial Risk Management just to deepen my knowledge about the financial markets, risk management, as well as to gain some technical skills. And as of right now, I'm with HSBC Shanghai as a summer intern in the commercial banking sector. And I also to get some exposure about the wholesale credit risk from a different perspective. And now next, I'll pass on to Ming to talk about himself.
Oh, hi everyone, I'm Ming, and I have an undergraduate degree in finance and economics from U of T as well. After my bachelor graduation, I worked as a financial analyst for 3 years, and I became a senior analyst due to my exercise in analyzing financial data, facilitating technology projects, and communicating with senior management. I also use my part-time to deepen my programming skills, and I'm currently a candidate for CFA Level 3. I've always been passionate about financial markets and risk management, and that's why I joined the MFRM program to deepen my quantitative and interpersonal skills. I recently finished a project for Ontario Securities Commissions to locate and aggregate Canadian OTC derivatives data with Python, and to create dashboards and provide insights into market trends and characteristics. And I just launched a job at RBC Capital Markets Compliance, and I will be responsible for handling regulatory inquiries and managing trading compliance risks. I've always been enjoying the new roles because I could add value by integrating my skills and knowledge in financial products, programming, and communication. So we are very grateful and honored to be here today, and we look forward to sharing our experience with you about this competition. We will begin with our case competition, and then we will move on to how we approach this competition and what we learn along the way. And at any time, if anyone has any questions, please feel free to stop us. as we would like this to be more of a two-way conversation. With that, I will pass on to Jason to start our presentation.
Thank you, Ming. I just want to check, can you see my screen properly? Just the PowerPoint screen? Okay.
Yes.
Awesome, thank you.
Yes.
Okay, so thank you, Ming, and we'll start from here. So today we'll talk a little bit about a case study on the losses in the currency option desk at NAB in 2004 as a result of their poor risk management. So to give you a bit of the agenda today, we'll start off with a bit of background information, and then we'll talk about how these traders in NAB obscured the portfolio by a practice called smoothing or earnings smoothing, which essentially was just a euphemism for fraudulent behaviors. And then we move on to argue that the smoothing practice and other misconducts stem from underlying risk management issues, to which we propose corresponding controls to each one of them. And then finally, we'll propose a few monitoring dashboards to monitor some of the key risks and end with some key takeaways. Now, to understand what happened at NAB, we see that between May 1999 and 2003, there were a series of loopholes that allowed for the manipulation of trades. And on top of that, there was also an overarching culture of non-adherence to proper risk management, both of which had led the currency option team to be able to conceal their risk exposures and also their losses through a process called smoothing. Now, to understand this smoothing mechanism, we have to understand that because NAB operates across different time zones, there exists this 1 hour window between their backend system's end of day close, where all the transactions and profits are recorded, and the time when all these transactions are reconciled by the back office. So as a trader, you can reasonably make a profit by posting a profitable trade, but a false trade during this 1 hour gap before the end of day. Sorry, you post the trade before the end of day close and then correct it during the 1 hour gap so that the back office doesn't see this as a faulty trade. And then by the time the back office comes in after the 1 hour mark, they won't see any problems with the trades. Now, needless to say, this act of smoothing has had serious risk implications for NAB. With that, I'll pass on to Laura to talk about the impacts.
Then to discuss the impact of smoothing, we will look at this from 3 angles. First of all, from a business perspective, since the true financial condition is being concealed, it can mislead NAB to set an inappropriate business strategy in a way that, on a general level, causes the business to misallocate capital and resources to each business line. And then on a more granular level, each business line or unit might not be able to make their own optimal and risk-informed decisions. In addition, employees in this case are also not being fairly compensated or even penalized for their performances. And then on the reputational side, their smoothing activity will significantly hurt the bank's credibility and reliability in all relevant stakeholders. And lastly, NAB's size is also just large enough to disturb the integrity and fairness established by the local regulatory agencies in the financial system, and ultimately hurting investors' confidence in the financial market. And then from a risk management perspective, incorrect performance information also leads to inappropriate choice of hedging strategy. Since the actual asset returns are manipulated, the asset correlation is in turn distorted. Therefore, conducting hedging using the distorted correlation, there's a chance that not only it wouldn't help to control the risk, but instead magnifying it. And then in addition, smoothing also deteriorates the corporate risk culture in a way that implicitly signaling all the other employees the bank is tolerating dishonest and deceptive actions. And then from a third angle, NAB should also be prepared that regulators will raise their capital requirement. And to have a more accurate sense of the size of this impact, we estimated the additional amount of capital requirement in 2 possible scenarios using 2 different approaches. So we went back into the context of this case, which is 2003, and then followed the 1996 Basel I amendment, which required the banks to keep a market risk capital for their trading book based on a value at risk measure. So for approach 1, we first intended to bring things back closer to the reality and then calculate the VaR using the actual market rate rather than their smoothed off market rate. And then to support that, we made a few simplifying assumptions, of course. This includes assuming their positions all net sell to a short at the money call in US dollar, and also assuming the portfolio's time to maturity is approximately 1.67 years, and then a few others. And based on these assumptions, we conducted historical simulation using the 2003 spot rates. And from there, we were able to calculate a 10-day 99% bar of 91.81 million, leading to a total capital requirement of 275.43 million, instead of their reported capital of 66.41 million. However, going forward, regulators are likely to be even more conservative in the period following the scandal. Therefore, we came up with the second approach, representing one possible scenario that regulators may require NAV to add back the entirety of the overstatement in their currency option portfolios. So to the currently reported 66.41 million, if we add back the overstatement in the most extreme case, which is 360 million, it will yield to a capital requirement of 426.41 million. But in both cases, going forward, there will definitely be a drastic increase in NAV's regulatory requirement. Therefore, this made us thinking, what are some remediations to these problems, and made us comprehensively scan through NAV's issues and came up with corresponding controls to each of them. First of all, the culture of NAV is definitely liable for fostering employee conduct issues. The business lack transparency between and even within each department, allowing these misconduct to persist for such a long time. So we would definitely suggest NAV to build more communication channels, could be work related to help fix the information asymmetry issue, and also the casual ones just to shorten the social distance between people. And aside from general communication, whistleblowing is also an important source of risk detection, and also a way to make the size of the loss be much more manageable. Therefore, we suggest setting anonymous whistleblowing hotline immediately directed to the risk management or even a CRO, as well as clearly define and promote the reward policy to it. This will not only incentivize day-to-day peer monitoring, but also deter employees from attempting unethical behaviors in the first place. And now I'll pass down to Irene.
Yeah, thanks, Laura. And in addition to that, we believe a culture of integrity should be promoted to avoid a business environment that fosters unethical behaviors and risks. And back to NAV's story, is good news only culture encourage manipulation and discourage timely escalation and corrective actions. Thus, NAV should set a proper tone at the top that holds an open attitude toward bad news, as well as continuously reinforce the employee's code of conduct through methods of trainings or during meetings. And the consequence and penalty of serious acting in breach should be broadcasted to all employees to discourage them from crossing the line in the first place. And to incorporate such culture of integrity into employees' day-to-day decision-making, we believe the performance evaluation should be based on not only revenue being generated, but also the risks that are undertaken, such as risk exposure in this case, and as well as employees' compliance to code of conduct and their long-term performance. And to avoid short-term profit manipulation, we believe bonus could be deferred or spread out over 3 to 5 years to discourage such motivation. And we also believe a robust and well-rounded risk governance framework serves as the backbone for efficient risk management. As in the case, although the strategies were said to be focusing on customer-based income, the option trading desk was still focusing largely on proprietary trading, indicating misunderstandings of strategies among employees and led to such a huge loss. And therefore, we believe tailored business strategies and corresponding risk appetite to each lines of business should be clearly defined and actively communicated through the various communication channels. It is important to make sure employees' interpretation of the defined strategies are unbiased and that the goal congruence can be achieved firm-wide. And in addition to that, we believe enhancing the risk ownership and risk awareness throughout the firm could also improve the governance efficiency. And this can be achieved by building the risk and control self-assessment framework into the standard practice for each department to follow. And other controls, such as strictly policing its risk limits by penalizing all active breaches, should also be in place. And another important improvement on NAB's governance is to enhance its corporate structure. And NAB's deficient risk governance framework resulted in a culture and structure where the risk management responsibilities are passed instead of assumed. And for example, risk management team were fully aware of the persistent limit breaches, but took no action into further investigation or escalation because they didn't take that as part of their responsibility. And therefore, we believe NAB should ensure concrete definition of responsibilities to risk management in place for all 3 lines of defense, as well as clear delegation of roles and objectives for employees endorsed by the upper level. And full authority should be given to make sure corresponding personnel have the power and capacity to do what they have to do without being disturbed. And also the structure should enable segregation of duties and emphasize disclosure on conflict of interest. And to further demonstrate NAB's attitude and determination toward mitigating employee misconduct and achieve a more efficient governance framework, we propose establishing a people and conduct risk committee specifically to mitigate conduct risks. And they will be responsible for the monitoring of conduct risks, including review and approval of conduct risk policy, code of conduct, risk appetite, RCSA, and PRIs. And now move on to talk about resilience. The impact from the scandal came in many folds, including but not limited to business disruption, corporate restructuring, and global operation scale back. And this signaled the importance to have a robust resilience action plan in place. First, it should enhance its business continuity plan, including prioritizing recovery objectives for critical operations and specifying detailed responsibilities for all stakeholders and conducting thorough business impact analysis of plausible scenarios. It should also make sure to have enough capital reserve to deal with unexpected loss events by setting aside sufficient capital determined by regular stress testing and scenario analysis. And moreover, NAB should ensure a thorough understanding of the interdependencies between both internal among business units and external with counterparties or third parties, and taken that into consideration when set up the business continuity plan. And next, I'll pass on to Ming to talk about more controls.
Yeah, and in addition to the previous problems, the absence of financial controls and gaps in back office procedures also led to the repeated limit breaches and resulted in that falsified transactions in the 1 hour window. So NAB needs an enterprise-wide platform that integrates all the systems and records employee actions. There should be a security management function in the integrated platform so that the company could set out employees with different access levels to prevent backdating and system misuses. And end-of-day entry cutoff will also discourage amendments of those false tree details. Besides, the platform should record and reconcile internal transactions to avoid fraudulent internal trees. The currency desk could also check with tree repositories and major counterparties to verify external tree details. And all these backend measures will prevent manipulation in that 1 hour window. The backend platform should also include a conduct risk model to detect suspicious trading patterns based on past loss experiences, historical trading data, and peer group comparisons. The backend system should automatically flag suspicious behaviors, and the workflow system can issue warnings and notify risk management, even if the immediate supervisor approved the breaches, like in this case. We have included many suspicious trading indicators in our operational risk dashboard. And besides, inadequate monitoring process has caused the currency options and risk management team to routinely underestimate their risk. So the trading desk should actively monitor key risk indicators, including desk and firm-wide Greeks. For example, each trading desk should maintain close to daily delta neutrality, and the firm should comply to limits on other Greeks, such as gamma and vega. They should also monitor the stress and normal VAR and YES, and they can incorporate the volatility smell in the VAR and YES simulations. And they should also update their asset variance and covariance matrix periodically, because this will be used to calculate all the risk measures. As mentioned before, traders are tempted to take risks to beat the target, so it's crucial to strictly enforce those risk limits to control the excessive risk-taking. The currency deck should also reveal their concentration on counterparties, assets, and maturity. They can monitor dependencies with counterparties and cross different business lines through a regular business mapping exercise. These measures will effectively prevent the currency DEX from accumulating large positions on a particular asset and against a certain group of counterparties. And since KRI and KPI monitoring and supervision is our top recommended control, we propose a performance and risk dashboard for the option market makers. And we will see that here is our full dashboard. And to evaluate their performance, we want to first visualize their market share and decompose P&L into fee, commissions, and rebates, and also in Greeks. And in addition to the portfolio daily Greek exposures, we also look at comprehensive measures to evaluate risk, such as VaR and ES. VaR and ES can also be divided into their stress and normal versions, and by different time horizons to evaluate added risk during the volatile market conditions and across time. And we also look at their concentration risk in terms of their set of the market, average inventory maturity, underlying asset, and counterparties. All these risks are also reflected in a P&L stress test of their most important risk factors. Finally, we observe the implied volatilities, including the volatility smell to the left and the at-the-money term structure to the right, so that we can consistently price options. Implied volatility should also serve as inputs for risk metrics such as VaR and ES. We also include a volatility chart in the middle to indicate mispricing opportunities to trade realized and implied volatilities. And next, I will pass on to Jason to talk about our operational risk dashboard.
All right, thank you, Ming. So in addition to the market risk, we also want to look at the operational risk of the trading desk. So here on the slide, we have a dashboard that we propose with 4 different sections. And on the top right, you can see the status indicating any issues that were discovered during an RCSA, which is just a periodic review. And also their general resilience level by the level of capital buffers and also the adequacy of a business continuity plan. Now, the first thing to see is that to ensure that these desks are trading in compliance to their business strategy and their risk appetite, we want to look at their trading volumes and the positions across different assets. We've seen a lot of these measures before, as Ming has mentioned, in the market risk dashboard. But on the operational risk dashboard, our focus is really on ensuring that these limits are adhered to. And we also want to look at measures, different measures over time. So here on the bottom right, you can see their positions across different assets, gross and net positions across time. And then on the top, you can see the risk exposures over time. So the VaR and ES, and on the left, you have the different Greek measures over time. And for each of these time series, we want to include their current risk exposures, any historical breaches, and any approved breaches. And in addition, for NAB's case specifically, there were plenty of red flags of suspicious trading behaviors that were not properly captured. For example, there were trades that had large P&L on the day of the execution. There were trades with large volumes, deferred premiums. So we would like to have a system that automatically flags each of these suspicious trades. But we also want to detect transactions that were done internally or at off-market rates or entered manually or after the end of day close. So in this part of the dashboard, we will see all of that. And then finally, the currency option desk at NAB was also plagued with a poor risk culture. So on our dashboard, ideally, we want to measure the extent and the quality of the conduct training here on the top. And then in the middle, we also have the profit targets over time. So for example, if a team was able to consistently meet or beat the profit targets, that could be a cause for concern. And then on the bottom, we also have a conduct news window that notifies users of their dashboard of any firm-wide conduct issues. Now, just to conclude, here we've summarized all the controls that we think NAB should put in place, and we ranked each of them based on their, 1, their implementation costs, 2, their business impact, and 3, their timeliness. The most important change that we believe is to improve their monitoring and supervision process, and this could be done simply by implementing the dashboards that we propose. And we believe this is an effective way because it's easy to implement and it can effectively limit risk and misconduct before they've had a chance to even manifest into losses. The second big change we want is we believe it's important to also ensure proper adherence to business strategy and risk appetite. And this is relatively cheap because this only requires the cost of training and education. But when this is done properly, this can effectively prevent any unexpected behaviors. And then thirdly, we also want to encourage ongoing peer monitoring. And this is actually, in this case, how the losses were initially discovered. And again, this is another cheap and quick way to implement and will have immediate effects. And then on the fourth change that we propose is we believe systems and integration and security could, we could do a complete overhaul of all of that, but that could be disruptive and expensive. So that's why we placed it on only number 4. So far here, we've proposed a long list of changes, but we'd just like to end here with some key takeaways in this case. So first off, the smoothing activities of NAB traders, they left a lasting impact on the bank's business and also the risk management.
And we do trace the problem to its origin. A corporation's tone at the top is what ultimately shapes its risk culture and all employees' standard behaviors.
In addition, we believe business transparency and information symmetry are the fundamental and indispensable infrastructure for healthy and efficient corporate operations, especially for risk management.
And the trading desk should also continuously and actively monitor and strictly enforce the predefined risk limits, even if the trader could make a huge profit from their risky bets. And breaching such limits should always have a serious consequence.
And finally, I think, or our team believes that risk management should really be performed and integrated into all the business lines and across the 3 lines of defenses. The risk owners themselves, they should control the exposures, while the risk managers and the internal audits, they should serve as an independent oversight to their preceding levels. But of course, all these 3 lines have become much more integrated since the financial crisis. So that is a direction that we see it moving towards it. And with that, I'll just briefly pause here. That's the end of our official presentation. I'll pause here if in case there's any questions about the case. Otherwise, we can move on to sharing a little bit about our approach in this case competition and some of the things that we've learned along the way.
Thank you very much, Jason, Ming, Laura, and Irene. That was a very detailed report that you did there. Does anybody in the participants have any questions for them today? I don't see anything, Jason, if you have something. Oh, go ahead.
Sorry, I just want to.
I'm just curious. Obviously, you're looking at a bank which is a specialized industry. So and also the case is almost 20 years ago. So I'm just curious, when you approach this case, given today's technological advance, would you think maybe if this happens nowadays, anything we can do with regards to blockchain or any other such technologies? And also with regards to the reporting lines and all that, is there any thoughts on changing how maybe, let's say, the internal audit or the risk management would be reported instead of to the top management, to the board, or anything like that you might have considered? Thank you.
Yeah.
Sure.
I think maybe I can take the first question. Maybe Jason, you can add for the second one and for the first one. So I think so in today's technology advanced world, there are a lot of integrated systems as we propose, and such as like Dynamics 365. And I mean, I know banks and large financial institutions, they also develop their own integrated platform. And in there, you can set up, like what we suggest, you can set up different system security levels. And you can also, like the system, record all the actions, and you can visualize them in audit trails, for example. And once we ensure the appropriate level of protection of the key information, and we determine who can approve breaches and who could amend records, we will have much better accountability. And in this NAB case, the two traders, they falsify those transactions, and actually their managers, he approved the breaches. And if we have an integrated system, the backend staff will see this, and they will also query about this. So I think, yeah, we're kind of judging what others have done in 20 years ago, but I think it still has an impact for today's world.
Yeah, and I think maybe just to add a little bit on that. So I think what you mentioned, William, about new technologies and its use cases in terms of, as Ming mentioned, the audit trails. I think that's definitely a growing field. Certainly for myself, currently I'm at RBC, and my team is actually in consolidated audit trail. So part of what we try to do is we try to figure out if there's any use cases with machine learning and AI, and perhaps blockchain. That's something that we're looking into that could help with audit trails. So definitely that's something that's a growing field. But for now, I think our team is still relatively new, and I believe that's the same across banks, at least in Canada. But that's definitely something that will be interesting to watch in the years to come.
Thank you.
Yeah. And sorry,
congratulations.
With regard, thank you, William.
Thank you.
Joseph?
And so, sorry.
Oh, sorry.
Yeah.
Yeah, just a question, because around the NAP, the NAV group, actually there are the practice in some of the business line. They have called the practice manager. That is like a quasi-compliance arrangement within each function. And of course, the struggling, I believe, will be like, whether these people are overly friendly to the business, or they are, I mean, on the other hand, would be like a watchdog like policeman, in the compliance. But I understand at that time, about like in 2004, at that time, around the NAP group, there are many business lines. They have the practice manager arrangement. They are quasi compliance manager that know, how to do compliance, but at the same time, be able to help, or to facilitate the compliance obligation of the function. So I think I'm just like to get your view about like, which side, I mean, to what level, whether they are friendly or whether they should be like a policeman, role on that part, because that could be, one of the challenge, for compliance between like compliance friendly to policeman role, in that aspect. Just want to get your view.
Thank you.
Yeah.
Because I used to work for a multinational corporation, and what they did, I was working in what they call the internal controls, which is more for helping the management. And then there's also a more independent internal audit. So in that sense, the management does not need to feel that, it is always us against them. So, if you talk about the policing, it will be more the internal audit people. But then we are helping them, the management, making sure that the compliance and the control systems and everything functions, so that when the internal audit team comes by, most likely they're not going to catch a lot of deficiencies or non-compliance. So in that sense, it's kind of like the two hands. One is the big stick, one is the big carrot, both working to making sure that the things fall in place. Just a thought.
Actually, NAP actually has a different different, more interesting practice at that time. They are not only internal control function, but they really have the quasi-practice manager, what they call them. I mean, quasi-managers sitting inside the business function itself in the department. So, you know, that is a different approach at that time. I mean, just want to, because the industry may be going into like more police in the regulatory regime, but at the same time, you know, the other side is, you know, of course, you know, the company also want to perform, you know, or help the business to be more compliant, you know, using best practice. I'm just like, you know, want to get Jason's team to give your view about, you know, which side, you know, in particular today's world about compliance, you know, whether it's this practice, is it worthwhile to think about, or, you know, that's already outdated?
Okay, thank you.
Yeah, I think,
thank you. Thanks for the question. Oh, sorry. Ming, please go.
Yeah, so I mean, as a person who just joined the compliance team for less than a month, my view right now is that no matter like what side we are on, we have to be independent. That's the key issue. Because we propose like we want to have 3 lines of defenses, right? And nowadays, every risk has 3 lines of defenses. Even for compliance risk, there are the tier 1 trade desk supervision. There are also the tier 2 supervision, who is responsible for the entire trading activities and responding to the regulatory inquiries. And also there is the 3rd line, which is the audit team, whether it is internal or external, that would help with the independent audits. I think the key word between all these 3 lines are independence. And to address the whether to being a friend or a policeman, I think there should be a middle ground in those, which I mean, we have to have a good relationship with the traders and with other teams, but we also need to remind ourselves our responsibility and accountability. Yeah, that's just my view.
Yeah, I think that's a very good take on that, Ming. And if I can just add a little bit, I think ever since the financial crisis, we've seen that the different parts of the risk management, as Ming has mentioned, the 3 lines of defense, they've become more or less, they've become a lot more integrated. I think that is the general trend. So I guess the practice that you mentioned at NAB, where you have like a dedicated person that's almost like a watchdog, I think that won't be in the case. That won't necessarily be the case in the future. I feel like the risk management industry is moving towards where risk management is almost integrated and performed across all different 3 lines of defense and across business lines, where, you know, the people at the front office, they themselves have to conduct some sort of risk management, and then risk manager and internal audit, they're almost like verifying the previous person's work. And so in that sense, I believe, yeah, in my opinion, I don't think there should really be a watchdog sort of person. But yeah, that's my take.
Yeah, thank you. And I think there is a question in the chat box by George. So I'll leave Kathleen to introduce his question. Thank you. Thank you guys for contributing. Thank you.
Yes, Jason, George asks, regarding the confidential whistleblower line, would there also be whistleblower incentives and whistleblower protections proposed?
Yeah, I think that's a great question. And Laura, you probably have better thoughts on this. But certainly, I think one of the core feature of a whistleblower line would definitely be there should be a no retaliation policy. That's like the underlying fundamental of a whistleblower line. Otherwise, there wouldn't be, like, people would not make use of that. So definitely no retaliation. And in terms of incentive, I don't. Maybe Laura, do you have any thoughts on this?
I think we have mentioned earlier in our presentation that it's very important to clearly define a whistleblowing reward policy and make sure this policy is being circulated within the organization so people are aware of it. Just that's the way to add incentive for people to perform like day-to-day peer monitoring. Yeah, I think it's important to get people to know that there are such thing exists.
I think just to add, in this case competition, or in this NAB's case, the way that the loss was initially discovered was exactly through a whistleblower hotline. So definitely, and actually, if you look at a lot of these scandals in the industry, actually, a lot of them do come through a whistleblower hotline. So definitely, this is, I would say, it's a good way of catching any misconducts. But certainly, we cannot rely on just a whistleblower hotline, because whistleblower hotline is something that you do when the risk has already occurred, when the loss has already occurred. So this accompanied with a proper risk control, risk management framework, I think is probably the most reasonable, most effective approach. I hope that answers the question.
Yeah, and we should, in addition, we should have like a good culture, risk management culture in the corporation. Like in the NAB case, they focus only on good news, so people hide bad news then. So, but if we encourage everyone to speak up, and we have those regular meetings to talk about our issues and concerns, and we promote a culture of integrity, that will be also, like if we do that properly, there won't be a whistleblower in the future.
I think just to add to things that we've already mentioned at the very start, I think what really ultimately won us this case competition was really the unique set of strengths that each of my team has brought to the group, and also their overall sense of commitment and openness to debate. Personally, I think I'm someone that can take a step back to see a bigger picture, and I think that helped steer our team in the right direction. But I also want to think that, you know, some of my team members, for example, Irene, she has her expertise in risk analytics and risk reporting, and actually for coming up with some great ideas in our meetings. For example, a lot of the risk metrics that you see in our dashboard was actually originated from her. And then Laura for her experience in conduct risk at EY. And of course, also for making all the slides that we have, which is, I think, one of the main reasons that we won this case competition. And also for Ming, with his skills in data visualizations and his understanding of market risk and system integration, and also being the person who's willing to ask very deep questions. And I think that was really valuable, because not everyone's willing to do that in a case competition. And then finally, I'll just add that I think we also worked effectively as a group. We started all our meetings with research, and then we would debate ideas in our meetings, and then we would end all of our meetings with clear deliverables and timelines. And then on top of that, we also had leveraged a lot of resource that we had access to. So for example, we took many elements from our courses, and also, as some of us has already mentioned, from our own work experiences. We reached out to different mentors. For example, Professor John Hull, he actually gave us very invaluable advice on how to think in the perspective of regulators and focusing on delivering a clear core narrative and key takeaways during our presentation. And yeah, that was really just a short spiel about our journey in this case competition. And we're happy to take any more questions as well. Thank you.
Just out of curiosity, I would just like to ask, since you guys are all very young, any thoughts of course, you guys are into like risk management and stuff like that, but there are also other related professions or disciplines, such as internal audit, corporate governance, and all that sort of stuff. And of course, there's also the systems audit, like the ISACA and other sort of professions. So just out of curiosity, whether you guys are thinking about also pursuing such designation. We have ours, obviously, and there are also associations that have theirs. So just kind of thought, hey, would it be kind of something you could think about along the way, or what?
Yeah, for sure. I think, as a risk manager, having an understanding of corporate governance and internal audit, that is really essential in risk management. I don't know about everyone else, but for sure that would be definitely something I would personally be interested in looking at.
Yeah, it's same with here as well. Happy to learn all the aspects of risk, and that's why we joined the MFRM program, and that's why we do this case competition. Yeah, everything about risk is interesting to us.
Okay.
Yeah, I think throughout the process of the case competition, we all really learned quite a bit from about risk management. We got to apply, what we learned from our master's program, and I think it's safe to say that all four of us, we have a newfound passion for this risk professional and risk industry. So definitely something interesting to look out for.
Lovely. Yeah,
And
I think there's a question from Mike, but I guess you guys answered it already, right?
Yeah.
First Canadian group to win the competition.
Well done.
Yeah. Thank you. Yeah, we were very lucky, I have to say. Our competition was tough, so we were lucky.
Well, luck goes to all those who get prepared, right?
Thank you for.
I won't be holding you guys up, but thank you.